Platinum Asset Management has a reputation for delivering superior returns for its investors. Its funds management performance saw investors flock to buy shares when the group listed on the ASX last month. Platinum principal Kerr Nielsen is a superstar in the funds management industry, considered one of the best fund managers in the country. Now, obviously, Platinum is more than just Kerr Nielsen, and today we're joined in the studio by Portfolio Manager Andrew Clifford. Thanks very much for coming in, Andrew.
No problem.
Now, markets are a bit concerned about the potential for rising global interest rates. What is your take on what's happening there?
Well, we do think this is the critical issue. If you look around the world, we've had rising debt levels in households, for some governments, and indeed now in the corporate sector, particularly with the private equity boom that's going on. So with all the debt that's out there and leverage through derivatives and so on, rising rates is the issue and has been for some time. Our take on it is, there is a real risk here. We have, rising food and energy prices, and inflation is creeping up around the world. So this is the big risk for markets everywhere.
And really, everyone is stretched, aren't they? Households.
They are indeed. I mean, we've seen, certainly in the US, we've had the blow up in the subprime mortgage market, and indeed, the debt levels even in the prime sort of lending markets have gone up a lot. And it's really just been the corporates whose balance sheets have improved a lot in the last 5 or 6 years since the tech bust. And again, the private equity guys are now taking care of that, because that's really their target, is these companies that are generating a lot of cash and have paid off their debt. Well, they're ripe for that, and we're seeing record levels of corporate borrowings in the US at the moment.
Now, I know your specialty is Asia, but the Australian share market has been driven by the boom in China. How long has that got to run?
Well, we can't see what's going to stop it anytime soon. And I say that from an economic point of view rather than the markets, which have been pretty hot of late and perhaps are set for, ripe for a setback. But
you mean the Chinese economy, not the Australian share market?
Yes, and the Chinese stocks as well that have also been very hot. But every time we go to China, and recently we were just there, we find new industries coming alive and investment occurring. So whereas you might be worried about if there's been too much investment in steel or cement, and indeed in many industries there has been and profits have fallen, each time we go we find something new. Recently we visited a company that makes turbine blades for power generation equipment, and they've taken the domestic market off the international players, and now they're getting orders internationally, but it takes time. That their product has to be certified and tested and so on. And so now they're embarking on a big investment in capacity in that industry. Similar stories in food flavourings and fragrances, another company we've visited, that have been approved by a big multinational, but their capacity just isn't big enough to get an order. So again, they're embarking on a big investment. Now, little stories, but each time we go, we find more and more of these type of companies. So that
justifies more and more investment.
Yeah.
And 3 years ago, would you have thought that China could take kind of a real action in, say, the turbine
No,
blade?
absolutely. You would have thought that, it was not possible, that, they wouldn't have been, had the technology or the competency to produce levels with those sort of specifications. But time and time again, we find they are able to. And, their costs come in, a third to two-thirds off the global players. Some of the reasons for that is because some of the costs aren't fully accounted for, like pollution and so on. But still
a huge question mark there, I'm sure.
Indeed.
Now, you're invested in China. What sort of stocks do you like, fairly briefly. And why?
Well, one of our favourites is Gomei, which is an electrical appliance retailer, a bit like a Harvey Norman. Has been growing the number of stores very quickly and their sales base very quickly. We're able to buy that on quite a low PE, although the stock is now doubled, but part of that is there was just too much discounting. They've taken out one of their major competitors, and profitability is set to improve.
What else do you like there?
Hutchison Whampoa, which people would know here as the owner of the 3 mobile network. They're actually one of the biggest operators of container terminals globally. They have huge business in Hong Kong and China that's growing very rapidly. The profits have been hidden by the 3 telephone business, which is now coming good. And so, we think that looks, like a very interesting investment at the moment.
Okay, what is your strategy for Platinum? The general strategy that you really follow everywhere?
It really is to seek out those stocks that others really aren't interested in, and to find, you know, the greatest opportunities are those that the crowd aren't focused on. And so, you know, Hutchison is a good example where people are very critical of their strategy in that 3 telephone business, but in fact, you know, if you look at the numbers, the losses are falling each quarter. The subscriber base they're putting on is very, you know, prospective. So it really is, you've got to stay away from the crowd and look for those things that other people don't love at all.
And that's what you go for.
Absolutely.
And you've had fantastic returns. Now, do you see, we talked about the economy in China, but in general, in shares, do you think there is still value? Or do people have to be really careful about shares?
Yeah. We find ourselves in an interesting position where we actually can find quite a lot of interesting businesses to buy, whether it's Microsoft on 17 times earnings or a Cisco, an Ericsson. These are companies that are growing very quickly and at valuations we've never been able to buy them at before. But then when we look around more generally, we see a lot of risk-taking behaviour by investors of all kinds, a willingness to gear up, balance sheets. And that's the sort of time when you should be cautious. A lot of stock markets have been, you know, given fantastic returns, and, you know, I think we are in a period which is ripe for a bit of a setback, particularly if we go back to the issue of interest rates. And if we do see a change that the Fed and other central banks are going to be putting rates up, I think, you know, we could be in for a bit of a rocky period.
Do you have concerns about private equity?
I think that a lot of what they're doing isn't really adding value. So I think that, you know, just changing the balance sheet of a company doesn't really help that much. Now, indeed, there might be great returns to be gained from it, but when everyone's trying to do the same thing, the odds are they're bidding up the stocks they're buying to prices that really aren't going to give the returns that you were getting 3 years ago when you were playing the same game. And it's just yet another place where, you know, more and more debt's being used. So, you know, we'd be very cautious about, you know, wanting to be involved in that part of the market.
Investment in India?
India's been a great market, and, you know, everyone loves India, so it perhaps isn't the place to be.
So is that the time you exit?
It is. So if you look at our Asian fund, we had 40% in India 3 years ago. We have about 15% today. India's a great long-term story, but again, it's one of those markets that's done very well. Interest rates are rising there locally. Inflation is quite high. And, you know, again, a lot more competition in the real economy because of all the investment that's come on. So longer term, yes, we think India's great, but in short term, the short-term time frame, we'd be very wary of that market.
We'll leave it there, and thank you so much for your insights.
No, thank you.